Hi guys, welcome back to the channel. Today we're talking about monthly paying dividend stocks and utilizing M1 to pay you all month long, making it rain dividends everywhere you go. So that's what you're looking for. Please stick around. Whoop! I've been using M1 now for a while and I really like it. I think it teaches you the right fundamentals. So I'm going to keep talking about it. Hopefully I can drag more and more people into it because I think it's a great platform, especially for new investors just getting into this, where it teaches you about dollar cost averaging. It kind of shows you, helps you connect the dots so that you can start investing the right way. So that's one of the reasons that I like M1 so much. With that said, when it comes to dividend paying stocks, I like them. I don't like them. One of the worst strategies you can really have when you're looking for stocks is to shop around for dividends. I don't think you should be shopping around for dividends. Now, if you're in retirement, maybe it's a little bit different. But in general, you should be looking for the best stock to buy. So I'd recommend that you go out and you find the best stocks you can buy. And if you were to look at my core portfolio, you would find Apple, Microsoft, Amazon, Google, all the big boys are there, plus some ETFs. That's my main core holdings. But as you fill those out, you start looking for other opportunities as well. So I do like to buy Pfizer. I like to buy value stocks. I like to buy Verizon. I like to buy a lot of these other stocks too that do pay a healthy dividend. But I don't say go shopping for that specific reason. I will say that with a dividend paying stock, you do get to take a little bit off the table and put it elsewhere. So like Apple, they pay a little bit of a dividend. That means when I can take that off, I don't like drip so much. I go throw that into a different stock, right, to kind of keep balanced. And Apple can continue to grow. Whereas something like Tesla that doesn't pay out a dividend at all, and I'm not a big believer in at this point because I think it's so overvalued, just keeps going up and up and up though, so who am I going to argue with? But if it ever does come back down, you're kind of back to ground zero, right? You haven't made anything. So I do like to have a little bit of a dividend. But as that goes up, 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 and you get to these higher dividend paying stocks, you are going to be giving up growth. And since we're talking about dividends, we should talk about taxes, because if you're in a tax deferred account, oh, that's great. You receive a dividend, it gets reinvested, you don't have to worry about paying any taxes. But if you are in a taxable account, you should account for your taxes. Keep track of them, be mindful of how much you're receiving and how much you're going to have to pay at the end of the year. So with all that said, I kind of like dividends. And as I grow out my portfolio, I sometimes add dividend paying stocks. And in this case, I started looking around at monthly paying dividend stocks. One that I've always owned is O Income Realty Corp. But recently I've added a few more. And yeah, they're a little bit addictive because of that dividend that you're getting every single month. However, if I was going to give these a grade, just in general, I would say a C, right? They're not the best investments, and that's why I make sure that I have my Apple, Amazon, Microsoft, etc. filled out first, or those ETFs, right? Go buy that VOO and just stock up on it. But when you have some extra cash lying around, you're not sure where to put it, maybe you put it into one of these monthly paying dividend stocks. So if these only get a C grade, why would I utilize them within my portfolio? Well, I think they work really well within the M1 platform, and I'll explain why. I'm also going to show you how you might be able to utilize these in conjunction with options over on Fidelity in the next video. And after that, you might never hear me talk about monthly paying dividend stocks again. So my 3 reasons for doing this within the M1 platform start with 1, dollar cost averaging. This is huge. It's really important. If you just bought some simple ETFs over the last 5 years and you did it every month, you'd be doing great. If you did it over the last 10 years, you'd be doing awesome. If you did it over the last 20 years, you'd be doing great. I swear, it's all about dollar cost averaging. This is huge. And by investing in these, because I'm looking at like 6 different investments, it's going to be raining dividends all month long, right? Different ex-dividend dates, different payout dates. These are going to be investing into my portfolio all month long. I can't wait. The second reason that I'm doing this within M1 is because the way it handles DRIP, dividend reinvestment. So on most platforms, if you, let's say, own Verizon, for example, and it pays you a dividend, it's going to reinvest right back into Verizon, whether Verizon's up or down at the moment. Doesn't really matter. But with M1 and the pie concept that it has, whatever piece of pie is down at the moment, it's going to put it back into that particular stock. So for example, over the last month, Bristol Myers, Pfizer, those two have really come off their highs. It would have been buying those with the dividends it was receiving. And then hopefully those blow back up, right? Like Pfizer, I think it was up 10% today on good news. So buy low, that's half the battle, right? And then we see where it goes from there. But I love that it doesn't try to just stuff it back into the same stock. It's going to put it into the piece of pie that needs it the most so that it can grow back, because all we're doing is buying good stocks, right? The final reason I'm doing this on M1 Finance is just, it's motivation, all right? So it's getting my mindset right. When it comes to M1, they're going to send me a notification every time I receive a dividend, probably 6 times a month now with these dividend paying stocks. It's going to say, hey, you just received $40. And then it's going to reinvest that into the right spot in my portfolio. It's going to tell me that day. And that's motivation. And you can't underestimate the value of that. That might be worth 1 or 2% annually. I'm telling you what, because especially with new investors, if you're a new person to investing and you're trying to get this idea and you're trying to get this wealth mindset going, that's the kind of stuff you want. You want that first thing in the morning. You're getting ready for work, tough day. Oh my gosh, what's going to happen? Hey, look, I just got $40. So here's the plan. I've picked out 6 monthly paying dividend stocks within M1 that I'm going to slowly start investing into, and I will dollar cost average just like anything else. But within my pie, I set them up as being only 1% of my pie. So the only time that these will receive any money is when I self-direct and say, put it in that specific stock. So I will show you how to do that now as well. Because typically when you put $1,000 into M1, it's going to disperse that into your pie as it needs to. But you can put $500 in and say, buy this specific stock. So I'll show you that as well right now. So I'm logged into my M1 account, and if you want to self-direct funds, first thing you want to do is you want to deposit some funds, and I did that, and this is on the weekend. So before the window opens up on Monday, you want to self-direct where you want this to go. So in this case, we're trying to fund some of our monthly payers. So you'll see right here it says 14 buys and 1 sell is scheduled to fill out this pie on Monday. But I can say, okay, I want to buy something specific. So in this case, I'm going to click into my monthly payers, which we'll talk more about. I'm going to click into LTC properties because I want to place an order for that one specifically. And then all you got to do is come in here and hit buy sell. And then you're going to tell it how much you want to buy of that one specific stock. So in this case, $500, continue, confirm buy, all done. And then you'll see that it's made the adjustment. So it'll have a pending position. If you go back to your home page, you will see it right down here. It's made the adjustment. Now it just says 11 buys. And you can view the details of all the different things it's going to buy, and you'll see that LTC is going to buy $500 because I've set it up that way on Monday morning. So really simple to self-direct. So the way I set this up on M1 was I basically made this little monthly payers to be 1% of my total pie. So it'll never put anything in there except for what I self-direct like I just showed you. Otherwise, I want the dividends that come out of this to be directed into my ETF chunk, my dividend miscellaneous, my tech, my staples, all those holdings that I like and I want to invest in long term. That's the way I'm going to control this. Now, if we hop over and we take a look at what's actually in these monthly payers, one way you can get to that is go to research and look at your pies that you've got. And then I'm going to go right into my monthly payers so we can kind of take a look at this. So if you look at the performance of these 6 slices that we'll talk a little bit about, you're going to see that over 1 year period, $100 invested would be worth about $120 now. Now, I will say that this does not include any dividends that would have been paid. So this would have performed better than even that 20%, which is nice to see. But as you go out a little bit further, you're going to see that even over 3 years and over 5 years, we're not looking at much of a gain because you can see this trend. So $100 over 5 years would be now worth about $113, excluding dividends. So not great performance as far as growth, right, with these. But dividend yield, if you look at it for these 6, is about 6%. Or 5.8%, let's say. So now let's take a look at what 6 I have in this portfolio. I've got 2 mortgage REITs, which are going to be high risk. Let's call them high risk. AGNC and Dynex. Now these are going to be high yielding, slow growth, not much growth at all. And you could see adjustments to their dividend yield over time. I wouldn't put a lot into AGNC or Dynex, but they do pay a nice dividend yield. So I'm going to look for opportunities to invest in these 2. Now, the other 4, I'm more comfortable with standard REITs. And we can talk down through these real quick. So the first one is LTC. And LTC pays about 6.5%. So that's the highest yielding REIT that I have in here. And they invest in senior housing and healthcare properties. So I like that going forward. But right now, they've got some things to work through. So, with COVID and everything else, they have to make sure that their tenants are paying and that they can continue to collect rent. That's probably their biggest risk and why there could be an adjustment to their dividend down the road. But if they can get through the next year and everything kind of gets back on track, I like this long term. We have an aging world out here. Now, Stag Industrial is right up my alley. This is a REIT that invests in single-tenant industrial properties, and it yields about 3.4%. Then we have ADC, and ADC is Agree Realty Corp, and it's right about 3.8% yield. And they invest in net lease properties that are leased to retail tenants. And then the last one here is SLG, SL Green Realty Corp, and they yield about 4.8%. So that's a REIT that invests mainly in Manhattan commercial properties. So that basket of 6 gives you a 5.8% dividend yield. Not too shabby, and may be something that'll just continue to kick in over time. So think about that a little bit. Yielding almost 6%, that means every month about 0.5% will be going back into all of your core holdings. And that's my true objective with the addition of these 6. Now, along with these 6, I actually have 2 more that I invest in before I even started doing this. One is O Income Realty Corp, one that most people know, and it yields about 3.9%. And O Income is, they invest in freestanding single-tenant commercial properties. So a lot of people know them, and I think this is always a little overvalued. You can always almost expect it to always be a little bit overvalued, but look for opportunities. Jump in there, buy a little bit here and there. That's what I do. The other one that I've got already included in my portfolio is JEPI, J-E-P-I, JP Morgan Equity Premium Income ETF, and it yields 6.9%, and you can see again. So altogether, I've got 8, and all month long, I'm reining in dividends, and that's kind of the goal when it comes to this segment of my portfolio. Again, it's not everything, it's just a portion, but I'm utilizing it, I think, in a way that I think can help build my portfolio over the long term. All right, so I would like to stress, I am not a financial advisor. This is just a plan that I have for this specific M1 account. And if you go back to my M1 core holdings, you're gonna see that I've got a lot of these other ETFs. I've got some other individual stocks. You won't find these up there yet. It's just a plan to slowly add to those so that I can reinvest those proceeds back into these guys that I'm a big believer in. So I do think that monthly paying dividend stocks can have a place in a portfolio, especially within something like M1, where you can consistently reinvest into other products and grow your portfolio over time. Dollar cost averaging is the way to go. I'm going to slowly add to these positions, see how it goes. Someday when I hit $1 million, I'll look and go, wow, it all started there with that video. So please like and subscribe. If you have any questions at all, ask down below, and we'll see you next time. Take care. Have a great night. Whoop.